Hello everybody and happy Sunday. Welcome back to another weekly Sunday video where I go over the markets for the week ahead. I talk about trades that I'm in, trades that I'm looking to get in, and as always, I show you my real profit and loss. No BS here. Before I wanted to jump into the charts, I wanted to just go through the COT reports here and show you guys the latest. Feel free to pause the video if you need to take a look at your favorite currencies or commodities that you are personally trading. What I wanted to note here is that gold took the #1 place for the #1 most proportionally bought asset on the list by institutional traders. This is why we call it the smart money tracker. We track what big money is buying and selling using the COT reports. On this same token, we also have on the other side the JPY, the #1 most shorted asset. You also have them going short on yield, which is interesting. You also have the Canadian dollar, the SPX, ZAR, US30, Aussie, Swiss, and so on and so forth. Another notable thing is that the biggest currency buy seems to be the euro at this time. And then, of course, you also have U.S. oil, platinum, and some other notable things like silver. Seems like commodities are staying hot on the list for institutional traders. I also do want to take a second here. This is the absolute last day to get access to the EdgeFinder for our 1-year celebration sale. So we have been building this tool. My company, we build software tools for traders, and the EdgeFinder has been officially out for a 1-year period now. We've been developing this thing like crazy. And I wanted to allow people who are last minute to the sale to get their access, and a final warning here today. So we have the smart money tracker, the retail sentiment indicator, bank signals, high probability watch list, signals for over 30 plus assets and pairs. And by the way, Bitcoin is coming to the show. We are just getting that finalized, coming in this week for those of you who have the EdgeFinder. Signals for your favorite assets and pairs. And yes, it is a one-time payment to get access to our software. All the information and promo code will be down below in the description. As you saw on the screen just a second ago, if you use code YTVIP, you'll get access to that discount for 40% off. Again, don't miss that if you've been thinking about it. Today is the absolute last day for the sale. So I noticed that gold, of course, is our biggest buy. We also have oil up there and platinum and silver. So this shows us that commodities seem very, very hot on the watch list. And I wanted to also take a look at the indices, which NASDAQ seems to be now at 52%, a slight increase from where it was. But if we narrow this down here just for a second to, in fact, let me take out everything except currencies. Maybe we can take a quick look at the currency side of things first, and then we'll look at other things in just a moment. So let's take everything out. I'm just removing them there, and that should be good there. Okay, so in terms of currencies, we have the euro as the favorite in terms of institutional positioning and the Japanese yen as the weakest. CAD following, ZAR, Aussie, and of course dollar, euro, pound. These things seem to be the biggest buys right now. So when we go take a look at the charts, and I was looking at gold for a super long period of time, just out of curiosity. I don't know if you guys ever look into like the long-term historical movements of things. It's always kind of interesting to me. I wanted to start with the euro here today, which the euro on a daily chart has been in a nice tear to the upside. And in fact, on Friday, we saw a really strong push off of the lows here. Now, in terms of the euro, I've been calling for sort of the same thing for a while now. I'm looking for a break above previous structure highs around the 1.1060 level. If we're able to get above that here going into this week, I think you have room to the upside, as the euro seems very hot in terms of institutional traders to the long side. I personally, if I'm trading the euro, I'm interested in the euro Japanese yen, which had a massive run up here on a pretty solid catalyst. Now, if you're not familiar with what happened, the Bank of Japan basically came out and they said, we're going to keep our interest rates at current levels or even lower. And so if we go into the interest rate data here tab, what this is going to show us is all the different interest rates of the world right now. And what you can see is that the US, here's the US, you have New Zealand, you have Europe, you have Aussie, and way at the bottom of the list, you have the Japanese yen, which is currently, at the time of making this video, we're floating at minus 0.1% in terms of interest rates. The Bank of Japan came out last week and basically made a statement that said, we're going to keep these at this exact rate or even lower if necessary going forward. So if you are newer to currency trading specifically, what we know is that generally speaking, interest rates on the higher side tend to cause increases in the currency. If this number is rising, if interest rates are rising, it tends to be positive for the currency, as we saw with the dollar last year in 2022. And if the inverse happens, of course, the opposite effect. So that is exactly what we had for currency traders out there noticing the Japanese yen. The Japanese yen got absolutely smoked this past Friday, and with continuation plays in mind, I'm looking for pullback opportunities, not just on the euro yen, but also on the pound yen. Now, I think on the watch list, we have several yen crosses. Yes, exactly. So we have the dollar yen, we have euro yen, Swiss yen, and pound yen. All of these, also NZD, Aussie, CAD. It seems like everything is pretty much short bias on the yen on the EdgeFinder right now. Now, remember, I showed you big money is short the Japanese yen. It's a notable scenario that, of course, the EdgeFinder has been actually calling for bullish setups against the yen, which I find very, very interesting going into this past week. And of course, also we're bullish on gold due to the COT report giving us a little bit of a buzz to the upside there, right? We have big institutional money, as you'll remember, long gold and short the Japanese yen. So again, this is where we end up sort of seeing the EdgeFinder showcasing areas of interest across the currency market, as well as the indices, commodities, etc. Now, of course, I like to show you guys trades that I'm currently in. So here's one that I am in. I'm currently long the SP 500 and trailing a stop. I shared this inside of the Discord channel. This is the trade alert that was shared last week. We were able to get into this trade and it just absolutely ran on Thursday and Friday. Really love to see it. And of course, you guys know who have been watching the channel. In terms of things I like to trade, the indices have always been my favorite. And recently I've been really trading them a lot, which has been awesome. So I'm looking for more upside here. The SP 500 notably hit a level of resistance towards the end of this past week. I'm looking for breakouts this week. If we get that, I'll be looking to trail this stop loss further into profit and lock something more on the table. So that's a trade that I'm currently in. It's floating around $2,800. Now, let me also show you a loss. I've also got a Bitcoin position open. What I love about Webull is that it shows you like right here on my watch list which ones I have trades on. So I don't have anything on gold. I don't have any bond trades open. I don't have any silver, but I do have a Bitcoin trade. This one's in the red. This is not necessarily a short-term trade though. This is more of a swing trade. You can see I'm taking it almost off the weekly chart with the idea of potentially adding if we do get lower. So a small trade on the account, but a trade nonetheless that I'm in is Bitcoin longs. I think we have potential to the upside, especially going into this week, guys, where we have very notable news coming out for this week. You guys should definitely be prepared for what we are coming into. So let me make sure to get that on the screen here. So a couple things to note. We have so many red folders this week, but I'm going to show you first. We have JOLTS jobs opening on Tuesday. We have ISM manufacturing PMI in terms of US news. And if you trade the indices, Bitcoin, gold, the US news, of course, is going to be likely the ones you want to watch the most. We also have, of course, the biggest of the week, I would say, is the Fed funds rate decision coming out, but also the statement indicating potentially what is to come next, which the market will very much likely respond violently to. We also have, you can't see it, it's actually an orange folder. I believe we have on Tuesday, we have CPI numbers for Europe, which could cause some volatility for euro pairs. Be aware of that. You can go take a look at that on your own time. We also have Europe, the ECB coming out with their refinancing rate on Thursday. So we'll have to keep an eye on that one because that will definitely make moves for the euro pairs as well. And then, of course, just to end out the week, nice and easy, we have NFP, which, of course, is a big one as well. The jobs numbers here in the United States will be heavily anticipated for sure. So again, we will be tracking all of that. We'll be live streaming several of those things as well. By the way, if you guys would like to tune into the stream, let's talk gold here for a second. So I did in my video yesterday, discussed gold a little bit and how it's just been stuck in this range. I am bullish on gold, as you saw from the COT data. So are big money traders. Big money is very long on gold. What I'm looking for personally prior to getting involved, as I've said several times, is a breakout above the 2010 mark. This is a pretty notable price zone that price has been able to reject several times. I'd like to see that price break out and see sellers get sort of beat up a little bit here. And then on potential pullbacks, I'm interested in a long trade. So I'm looking out for this opportunity. If we can get a break and retest at that 2010 mark, I'll be looking to trade this thing back up to the highs if I can. So of course, we'll see if we can get the break, and if that happens, I'd be willing to take a risk seeing if we could get back up to the previous highs. But then really, I think we do have potential to go back to the all-time highs, which reside around 2070. So we'll watch out for that trade if it starts to form this week, but currently still stuck in this range and watching for that. One last thing I'll say about this is that if you're a gold bear, what I would say is if we get the inverse effect of what I just said, I won't be participating, but a possible break and retest of this area could be an interesting short. Trading back down to like 1950 could be where I would say bears could take it if they get a hold of this zone. Now, why would I not participate? Short answer is, of course, you guys know I do use technical analysis, but I also use fundamentals and sentiment, things like the commitment of traders data, to help me out in my trading. So I use that stuff to add confluence to my trading. So I don't see a lot of upside to trying to go short personally. I like the upside, meaning I like looking for longs. If we see those longs come in and they have confluence from both the technicals and the fundamentals / sentiment, I'm very interested in taking trades there. So there's a couple things there. In terms of dollar yen, some of the other yen crosses, I am also interested on the long side. You've got dollar yen here breaking out big time. If you get some pullback here, this is probably a 50% retracement off of this swing low. Yep, there it is. So if price comes back, I think there may be some value looking for pullback plays. I do like dollar yen. Also on the watch list for buys was pound yen. So I'm going to look at this one. Look at how explosive this is. This is actually turning into a 61.8% retracement. If you get the yen strengthen a little bit all the way back, bring the pound down to like 168. That looks interesting going into this week. Another trade for continuation setups. Those are pretty easy trades, I would say. Of course, not necessarily guarantees, but they're straightforward for my trading strategy. We also have some interesting ones like dollar CAD. Dollar CAD popping up as a strong buy. And I like this chart. It's a strong upward trend. You've got price pulling back here. This is a 4-hour chart that we're looking at here together. This is almost like a daily chart level though, if I'm being honest, because if you look at the daily, yeah, this is kind of like do you want to try and trade this thing back to the previous highs up here around 1.3833, right? So a longer term trade here, but still an interesting one nonetheless, right? We've broken sort of this downward structure to the upside, and now as we retest into the 38.2, I would say there's decent upside. I would say risk to reward looks good there in my opinion. As we also will note, the Canadian dollar was our second most shorted asset by institutional traders. Remember, we were looking at currencies specifically. The Canadian dollar has a very heavy short interest by institutional money. So, I don't hate the idea of longing the dollar against the Canadian dollar, especially if you think, the stock market has pushed up a little too much, or you're a little concerned and you think maybe this week could be strong for the dollar with the Fed meeting. Well, it could be interesting to watch the dollar CAD. So yeah, that's one on the watch list. Not necessarily a dollar bull at this time right now for me. I think there are just other trades that I'm more interested in, but I'm not necessarily, like things like long gold, long the S&P. Those things I really like right now, and I've been trading them obviously. So I'm kind of more interested in those trades than trying to trade the dollar at this time. We also have some sells, the Aussie dollar, right? So if I'm looking at AUDUSD, this one I would say is especially attractive if you're more on the camp of like, I don't really trust this stock market run up. I'm sort of oriented towards more risk off. This Aussie dollar trade could be something to look into. Now, if what you're saying here is if you're shorting this, you're kind of by proxy also shorting the SP 500. Why? Because again, you're buying dollar, which tends to do well when the stock market falls. Not always, but often enough. And you're also selling Aussie, which is, of course, the growth-oriented economy that is Australia. If you're shorting that, you're sort of betting against risk on, meaning you're betting against growth and that sort of thing. You think we may go more into a conservative sort of recession fear zone. In the case of a recession, this pair probably, like we saw in 2020, probably goes down tremendously. So here's just a flashback to your 2020 days. So in 2020, this Aussie dollar just fell off a a cliff. Then, of course, when quantitative easing went out of control, we saw the inverse effect happen where money was pumped into the system. The dollar devalued heavily, and we saw the Australian dollar do quite well there. So, an interesting trade to watch out for. If I'm looking at Australian dollar, like I said, if this thing pops up too much, I think I probably wouldn't get too overly optimistic as it reaches into the 61.8 into the 50% retracement zones. I would say net bearish. Again, we have a lot of contributing factors there. Economically, the dollar looks a lot stronger, but yeah, that's kind of where I'm at with those. You also have NZD USD as well. Comparatively, I know Ivan, one of my co-hosts on my show throughout the week, the live streams, he is very bearish on NZD pairs. I'm not sure if he still is. We'll have to ask him on the live stream. But he's been short biased on NZD. I don't hate it, right? Especially with this confluence with the EdgeFinder. Rallies into these zones, in my opinion, actually do look like a bit overbought, right? Like they could be met with sell pressure for sure. So that's something to pay attention to as well going into this week. You have NZD pairs flying high. Let's see, in terms of retail sentiment, probably a good moment to take a look at this. So again, you have, in terms of currency pairs, retail very long the pound USD. I'm sorry, very short the pound USD and very short the dollar CAD, and then very long things like Aussie and dollar Swiss. We can also take a look at indices. We did an indices sort of focus video yesterday when we talked about gold and the S&P. But again, indices, retail traders very short, right? Pretty much across the board. German 30 all the way up to S&P. We have retail traders very, very short. We add in commodities there to this list. And you can see here's gold about 50-50. And then oil, retail traders very much long. Now, I wanted to comment on US oil here for just a second. Oil has filled completely this gap that was opened. So you can see this zone here, gapped open here on OPEC supply that has OPEC supply concerns, right? There was a shrinking in supply back in this point, caused a rally. Then fears of a sort of a continuing to be hawkish Federal Reserve pumped this thing back down. So in my opinion, I actually am sort of somewhat bullish on oil, and we'll watch to see if that can develop in an interesting way. I'd like to see this thing sort of start to break higher. Before that, though, as retail traders are very long on it, I don't necessarily want to be buying it here. But what we generally see is that if something starts to trend up, retail traders will start to be short on it. And we know that institutional money is sort of buying the oil market, possibly calling BS on the idea of a central bank being very hawkish, but we'll see. They're also sort of short bias on indices. The smart money is as well. So there's a little bit of conflicting data there, but we'll have to watch to see how that plays out. I'd be interested in oil if it only starts to sort of break out on the higher time frames. At current trading patterns, I'm not necessarily really interested. So we'll watch out for that going into this week. Remember, guys, this is the last day, the absolute last day to get access to the EdgeFinder sale. Use code YTVIP down below in the description and get your code there. You can use that link and get access to this thing for practically almost 50% off. It's 40% off, but it's close enough, and it saves you a tremendous amount of money. If you've been thinking about getting this tool, again, do not hesitate. Today is the day to do it, because if you wait, if you wait too long, it will be gone and you will have to pay full price if you decide you'd like it. Of course, you don't have to use the tools. I'm just saying that I want to make sure the word is out there for people who do want to buy this at some point. Don't miss the discount sale. It's really heavily discounted right now as a thank you to our followers who have supported us on the content side as well as in the software side. We've been developing this with the help of our community, so it's been really, really cool just to hear feedback. So again, grab access. Thanks very much for tuning in to today's video. Have a great trading week ahead, guys, and trade safe. See you next time.